The market creeps higher after a Friday sell-off. Is it a dead cat bounce? This is Invest with Jacob. Okay, guys, so in last week's video, we told you that we were looking for the market to pull back into our support boxes, and as long as those boxes held, we were looking for the market to push higher for another all-time high. However, the NASDAQ gave up its support box, and the ES let them poke through the bottom. So the question is, are the bulls done? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, as always, we do go over the indicator. We have built a custom indicator that's been crushing the market, and it is a trading view indicator that you can purchase on our website. So let's jump into the chart and check it out. Okay, guys, so here we are on the 5-minute SPY chart, and I want to do a quick setup for those of you that don't know. The left and the right light blue, this is after hours trading. We have that on for the SPY, but we don't trade it. It just helps the indicator get the right setups and signals. So we do need to have that on. We do need a trading view account, and you need real-time data for the NQ and the ES for the indicator to work properly. This is a trading view only indicator, so you can get it there, and I'll tell you how to get it in just a minute. Today was actually a so-so day for the indicator. Sometimes that happens. Nothing is a perfect trading device or we'd all be billionaires, but it is a darn good one. And even on a so-so day, check out what happened. Right at the beginning, this sell right here at the beginning was a winner. Came back up, this sell was a winner. Okay, then you had this sell here, which was a loser, and this sell here, which was a loser. So now you're 2 and 2 on the day. And then this buy here right before 10 o'clock was a winner. And that took us into 10 o'clock, and I don't trade after 10 o'clock, even though you had this winning buy and this winning buy and presumably this winning sell at the end of the day. So if you're an all-day trader, it absolutely crushes throughout the day. I stop at 10 because typically the market gets choppy. It did here as well, but the indicator did find a few trades for you. And on a so-so day, we went 3 wins and 2 losses, which is, again, so-so because normally we're going 4 and 1, 3 and 0, things like that. So the indicator, guys, it takes all of the guesswork out of trading. It is based on price action. It is a forward-looking indicator. It calculates about 150 different things all at once so that you don't have to look at charts. You don't have to look at volume profiles and nodes and all these different things that are confusing, take time, take work, and then you miss the trade because you're not ready. It takes all the guesswork out. When it says sell, you sell. When it says buy, you buy. Great day trading and swing trading indicator. This is a swing trading indicator as well. And the way it works for swing trading is really simple. I'm going to do, we don't cover swing trading on here very often, but I'll do it right now. So we go to the weekly chart for our swing trading. Now, swing trading's a little bit different in the sense that we are on the weekly chart and stops mean continuation. I'll tell you what I mean by that in just 1 second, but check this out. So we get the sell over here, really nice entry right off of the first week of selling. So you could have sold right here, got short at 449. They came all the way down to 409. So 40 points of downside right here in just about 10 weeks time. So you set up your short and you take your profit there. You don't have to wait all the way down to the bottom. You can take your profit early, obviously. And then a few candles later, you get this buy signal. And I mean, look at this rocket ride. You get in at 441 or so, somewhere in this candle. Let's say it's the high. Let's say you get in at 450. You could have ridden that all the way up to you got that sell signal at 516. That's 66 straight points to the upside. It had it absolutely killed. Then you had this sell signal right here, as long as you set your stop wide enough. Or look, essentially what you're doing is you're looking for this SS, the sell stop. And this is still a winning trade. You get this sell right here. They did bounce it for a second, but then brought it down. So if you got in here at 514, they brought it all the way down to 494. That's another 20 points of downside for profit. And then once you get a stop, so SS means short stop. Once you get that, that means resumption of the trend. So you can switch back to long here, or you can stop, take your profit and stop out wherever you stop out. But when you see this, that means resumption of the trend. And we get, another 536 up to 560. So another 24 points of upside here on the SPY. You get a sell here. And that was 539 all the way down to 510 or so. So another 29 points of downside. You got your SS, which means continuation. You did well there. This sell did not work. It was the only one out of all of these that didn't work. And you got the continuation right here. And then they've kept going up since then. So even though this one didn't work, you flip long right here at 570. They took you to 600 for 30 points of upside. Guys, day trading is fine, but the swing trading crushes. And as long as you have the signal, you're good. It's absolutely crushing the market, guys. It takes all the guesswork out of it. We haven't looked at swing trading much, but there's your long-term swing trading chart. It is on point, guys. You have to be part of this. So how do you do that? Okay, there's a link down in the description. Check that out. It'll take you right over to our website. Once you're there, you'll be on our membership plans, trading view, and indicators courses tab. You get the indicator right here. It's $59 a month. Now let's go back and look at that chart. Do you think that if you had even just one contract that would pay for $59 a month right there? How about right here? How about right here or down here? All of those trades would have paid for years of this indicator for just one trade. And you're getting all of these trades for $59 a month. If you want it a little cheaper, I do have a yearly plan, $590 for the year. You get 2 months for free if you want to check that out. Guys, it's killing the market. It's great for day trading. It's exceptionally great for swing trading. I want you to be a part of it. So here's what I'm going to do. I'm going to give you a 30-day money-back guarantee on either one, if you get the yearly or the monthly. Try it for 30 days. If it doesn't do what I say, if it's not performing the way you think, if it's just not what you want, send me an email and say, hey, it's not for me, and I'll refund your money. I want you to be a part of this, and I stand behind everything I do. 30-day money-back guarantee, guys. Check it out. All right, now let's jump into the charts and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And what we saw on Friday on the ES anyway was the market come down and just slightly push through support here just a little bit. And that is going to adjust our count slightly. And the reason for that is no matter how you want to count this to the upside, there's going to be overlap here unless you're looking at it how I have it. So there's a few ways to look at this. And when you get into these few different ways kind of scenarios, this is when you sit on your hands and wait. We're up near a major topping point. This market's been moving up. It's not very clear on the structure. This is a good time to take shorter term trades, trade setups, and then sit on your hands sometimes and not trade at all. Cash is an excellent position when you have setups that aren't clear. And right now we're in one of those places. So off of this low, we now can count 1, 2, and then you have your 1, 2, 3, 4, 5 of 3. Okay. And what this tells us here is if this is 4 of 3 and this is 5 of 3, wave 4 itself, because of corrective depth theory, should not come lower than this 4 here, which is a huge support level at 57.24. And it could be done way up here, but we could see, this and then back up for 5. But this is where the scenarios come in, and this is why I wanted to zoom out and show you where we're at so that you can kind of understand the bigger picture, or intermediate picture, I should say, as well as the zoomed in picture. So off of this high, if this is circle 3, circle 4 needs to hold 57.24. Assuming that happens, we'd be looking up, and I'll move this over so we can see the fibs. We would be looking up to the 61.76 to 63.34 region. And the reason we have these fibs here and why we know that is wave 5 should be roughly the 0.5 to 0.618 extension of waves 1 through 4. However, it can extend up to the 764, but over that, and we have to start calling it something different and have a different structure on our hands. It's too long to be a wave 5 at that point. So our target area is 61.76 to 63.34. Same basic area we were looking at before, just a slightly different way to get there. And that's if this is going to be circle 4. Now, I did say there was a few, and that means 3 opportunities here. The second one is also bullish. However, it's a deeper pattern and still takes us to the same place. So all it says is instead of this circle A being here and this circle B being here, it would say this is all of A of 5. B of 5 would come back very likely into this support here at about 54.60 to 5,500. And then we'd look for C back up into the same region, that 63.30 or so region, and just a bigger ABC overall. So if they do start to pull back here and they break 57.24, this would be our next level of support that the bulls can hold and still be bullish. Third is that the top is in, and that's a possibility, and that's something to keep an eye on, especially with any break of support like we've seen on NASDAQ, because then it turns into overlapping structures that don't play out as well. So something to keep an eye on here is that this is 1, 2, 3, 4, 5. Right here where the circle 3 is actually circle 5. And that's the overall top. And that would come to fruition with a break of 54.59 and really ultimately a break of this low right here at about 51.90. It's the August lows. We break the August lows, and the top is very likely in place, and we're very likely on a much, much bigger correction to the downside. So this B wave low here at about 54.50 is going to be a very important level. Should they break that, I will be ready to consider the top being in at that point, and then obviously breaking through the August lows would be that confirmation point. So again, 3 paths. One is that they hold 57.24 and push up to 6,300 or so. One is that they break down towards 5,500 to 54.50 and come back up to 6,300. And the other is that they break down below support and the top is in. Over on the NASDAQ, so stop me if you've heard this, but the NASDAQ does have similar types of setups. The NASDAQ did give up much more of its support and is closer to its wave 4 low here at 20,000. So something to keep an eye on. The NASDAQ continues to be weak. The SMH is actually pretty weak. It broke a major support level, so we do need to keep an eye on that, because if the SMH fails, the NASDAQ is likely to fail, and that means the ES is very likely to fail as well. So keep an eye on the SMH as we move forward here. We have NVIDIA earnings coming up that will heavily affect that. I am still bullish on both charts. I do think we need another high towards that 6,300 area. But again, if support breaks, that is a major issue. So for the NASDAQ, you still have your 1, 2, 3, 4, and then 1, 2, 3, 4, 5 of 3. This would be wave 4. Needs to hold this 20,000 level. Assuming they hold that, we'd be looking for them to push up into that 21.7 to 22.5 area. So this would be our overall target area if they can hold this low at 20,000. If they cannot hold that low, again, that just becomes a potential for this to be A, B, C into the same area, that 21.7 to 22.5 area. And if they break this low over here at 18.6, that is an incredibly strong warning to the bulls that the top may be in place. So very similar on the NASDAQ. We're looking at 2 bullish potentials, 1 bearish potential. I do still think we get another high. We're going into seasonality that's bullish. You have a setup that still needs another high to kind of finish itself. But if they do break support, I will not hesitate to switch to the top being in and looking at a much, much bigger correction at that point. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans. These both come with a 7-day free trial. This is because I want you to get in there, make sure you love it, become part of our trading team, interact with PT and I. Make sure it's for you before you ever spend a penny. You can cancel at any time. I want you to make sure it's great before you ever have to get involved. I stand behind everything I do. I say that about my indicator. I say it about my rooms. I stand behind all of my products, and I know once you get in there and try them out, you're going to love them. So come check them out. Now, we also have our educational material. We have our Elliott Wave 4 beginners online course, as well as our advanced Elliott Wave course. And these courses are helping people understand the market in a way that makes sense. The complex patterns that we've been seeing lately are very confusing to a lot of people, and the advanced course really covers those well. In the advanced course, we go through your introduction, then we go through advanced concepts, obviously the advanced fib levels, diagonals, double and triple threes, the flats, the triangles, how to trade Elliott Wave. This is really important. A lot of people kind of know where the waves go, but not really how to trade them. We go through how to do that in a very high reward, low risk situation. That's a really awesome thing. You can see on the screen that our traders do love this course, and it is helping them understand the market. And if this course is too advanced for you or you're just getting started, we do have that Elliott Wave 4 beginners online course. This course is helping real traders make real money and finally understand the stock market in a way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up. That's because the news cycles don't matter. Elliott knew this long ago, and he threw them out the window, and he knew that key levels mattered. He knew what happened when they held and what happened when they broke, and this gives you such a big advantage over the rest of the market. In this course, we have 25 videos where we go over your introduction, your expectations, your mindset, why this works, and the KISS method. We go through your chart setup and tools, what tools you need, how to use them, and why we use them. Then we go through the Elliott Wave 4 beginners area, all the waves, the corrective depth theory, the degrees, the impulsive moves, how Elliott Wave works, and how to make sense of this irrational market. The cool thing about both of these courses is if you want to get them at a discount, we have our bundle pack, and you can get $37 off both courses by getting them at one time. But if you want them for free and you don't want to pay anything at all, simply join one of our monthly rooms, as they are included in this price. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through any chart you guys want me to break down. I also go through gold, Bitcoin, Nvidia, all the Mag 7, everything you want to know about the bigger picture. I answer all your questions. I go through economic reports and readings and why they matter and when they matter, because news doesn't actually matter. When the news matters. And that's kind of confusing, but I explain all that kind of stuff on the call. You also get all of the training material you just saw, 2 complete training courses, all included in this price. We trade the SPY and the QQQ, and so we swing and day trade, and that means we trade quite often in my room. If you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, income trading that crushes, guys. He kills it with this. And his reduced risk binary method that gets you in at a cheap price and gets you huge multiples on your money. That's how he structures that trade that's so unique. Something you really have to see to understand, and that's another reason you get that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today, it's all about support. As long as they can hold 57.24, we can see a more direct route to 6,300. Below that, we'd look down towards 5,500 to 54.50, back to 6,300. And below that is a major warning that the top is in. If they can break back up over 6,000, then we'd look for the breakout towards 6,300 overall. Over on the NASDAQ, all about support. The 20,000 level is critical. As long as they hold that, they can push directly towards 21.7 to 22.5. Below that, we would be looking at this 18.5 area, and then they can push back up to that same area. And if they break that, that's a major warning that the top is in. A little bit of housekeeping. I am out Thursday and Friday of this week, so no videos on those days. That is your market update for today. I will talk to you tomorrow.